Okay, welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. Welcome. Today we're looking at a chart of the market, the E-mini Russell Futures contract, the front month contract. A bit of a choppy day as we would have expected given the current tumultuous market environment. And so just more of the same. Had a gap open lower, went up to retrace and fill said gap. Ran into the trend, as is often the case, came back lower, chopped around a little bit, few trading opportunities. Nice little surge at the end of the day, break above the trend, but just couldn't hold the ground in the market, at least in the E-mini Russell. Dow's up a little bit, should be up a little bit higher on a relative basis given the, I guess it was a 10% move in JP Morgan after buying Bear Stearns for, what, $2 a share? I think it was something crazy. Bear Stearns have been uh, courting suitors uh, to court them for $40, $50 a share, $80 a share. I can't remember exactly, but was always kind of teasing everyone to buy the firm, but they never would really show any interest in selling. And that's what happens. $2 a share they end up going for. But and certainly the $5.7 billion in losses of Bear Stearns on Friday, followed by what, another 3 or 4 billion today. A lot of money being lost on Wall Street, and the market is certainly reflecting the volatility there. So what are we looking at? We don't. The news is very entertaining to us, and sometimes you do pay attention to it. But we're technical. We're technicians, and what we saw was a very strong divergence in a bearish fashion. Bearish, 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 bearish. Friday morning actually had a bit of a higher open on here. So if you look at that, but all the bullishness that was present the prior day had completely vanished in a nice negative bearish indication for the market, and boom, what do you get? A sell-off of 35 to 40 points, and some continuation of choppy move. So then we get a base today. Let's go ahead and our proprietary indicators are still bearish on the market today, although we did have a little bullishness there. Really nothing to write home about, so we're still bearish. Bearish indications would definitely be to suggest to sell this, and of course you see even a new low there, a new low there, bearish, bearish. So the market remains bearish. We're going to go ahead and switch over to look at the chart of the daily, and we'll be looking at the S&P 500 cash index. Right there, we'll go ahead and clean that up for you a little bit. And trying to hold the level around 1270, 1275. Just trying to do it. A little bit of a dangling participle there, dipping our toe. The bears dipping their toe in the water to see what it's like. Apparently they didn't like it. Had a bit of a bullish tail reversal, although certainly didn't close above the barely closed above the midpoint of the day's range. Much less a close above the open to suggest any continuation of the move. But we are holding on to this horizontal support resistance right here around 1275. So that's rather interesting. Obviously, a continuation slide below there, particularly after the early session tomorrow, would suggest further moves lower in price. And certainly wouldn't be a surprise given that we've remained bearish since what, 1468? I believe was the call. Where are we at? 1468.29 on 1231. We moved to officially bearish on the S&P. So it's 1468, and then that goes to we'll go ahead and turn that down a little bit. And sorry about that delay, but yeah, we certainly remain bearish. So almost 200 points in profit. I hope you guys are watching your videos, because on an official basis we have remained bearish for the last nearly 3 months, and remain so today. We did take some short-term profits. Of course, that's 20% of our influence, but the overwhelming bias remains bearish, and that's where we've remained on an official market timing basis for the U.S. stock market, the S&P 500, and that's where we remain today. So we are at 1275, trying to hold ground, bearish in terms of momentum, bearish in terms of directional movement, just still bearish in terms of price. in terms of the trend, and but in terms of price technical, we are trying to hold the ground. So we'll see what happens. Obviously, the intraday indications remain bearish, price remains bearish. So what else can you say? It's a fully bearish picture. But what we're actually going to look at is we're going to switch over to looking at our forex stuff. The futures has been a bit choppy. Got to tell you, has been a bit choppy over the last 2.5 months. And so we've compiled some numbers. The run that we've seen just in the last 2 weeks. Look at this. Here's our MAFX portfolio. This is a $50,000 portfolio. Gains another $15,258 today. And this was about a half an hour ago or so. It's actually up 17,033 right now. So another couple $1,000 since we've been preparing the this video. But as of this print at 3:22 Eastern Standard Time, I should say Eastern Daylight Savings Time, up $15,000 for a cumulative return, net return of, in 16 days as of today, including this gain, 142.81%. Now, there's a reason this portfolio is the #1 portfolio offered by Strategy Runner. The #1 consistently over the last year has been the #1 performing portfolio on Strategy Runner. Website, and of course they have arguably the best advisors in the world, internationally, globally. So it's a big honor to have this, and you see the performance. And we're actually going to switch over and look. 142.8%, $71,000, over $71,000 on a $50,000 portfolio. We did introduce an MAFX Lite, a $10,000 portfolio. Again, these are both aggressive portfolios. You can certainly trade this with 20,000 or what have you, or trade a few units of that if you want to continue to be aggressive. If you don't want to quite go the 50, you want to go 20 or 30, just trade 2 or 3 units. We'll certainly see what we can't offer you there. And we went ahead and compiled the numbers of the MAFX and the MAFX Lite over the last since November of 06. And there's the Japanese yen and euro, 670. This is actually on the website, and you'll see the hyperlink to it. But routinely 665% gain, 785% gain, 400% gain for the Aussie. The Swiss franc 600% gain, 700% gain for the pound euro. And this all leads to some pretty impressive gains of 772% over the last, 15 months, 12 to 15 months in this portfolio. So this is our MAFX, and this is actually of March 15th. Went ahead and threw in March in there because it's just another banner month. If you look at some of these just the last several months, like look at this. The last several months have just been gangbusters, particularly for the Swiss franc and for the euro British pound. But we're going to go ahead and switch over to look at some specials that we have. We actually have extended. This actually isn't $500 you'll save, but you can still save $300 on the MFX Lite. Just go to the website, go to the home page, www.MiniAnalyst.com, and click on MAFX Lite. Sorry, I'm a little groggy today. I think that rampant flu virus that we've been seeing is trying to get a hold of me a little bit, but bear with me. Go ahead and click on, actually just go over here to MAFX Forex, and you can see what we just printed there. 150% gain almost. All the numbers for the last 15 months. And there's the dual Forex trader. We actually haven't updated those track records. Those are through March of 07. But go all the way down, and you can either do the MAFX for $3,000 for 3 months, and obviously you see the $70,000 gain in the last 2 weeks. This is certainly one of the better values that we have. Or the MAFX Lite, enter promo code video. Just go ahead and add to cart, and you can still save money on that. Go ahead and apply that, and that would take off price $600. So if you guys have any questions, go to the website, chat with our support team, or shoot us an email. And I hope you guys are having a great trading week and all this volatility, and with that comes opportunity. So we'll see you next time.